Law Nation, welcome to the Passive Income Attorney Podcast, your favorite place for learning about the world of alternative passive investing so that you can practice when you want to and not because you have to. So, if you're ready to kick that billable hour to the curb, start by going to attorneybydesign.com to download the Freedom Blueprint, which will also get you access to partner with us on one of our next passive real estate investments. Okay, today, let's chat about that transition, that journey to billing less and living more and obtaining financial freedom. There's more than one way to do it, obviously, and that's for sure. But one surefire way is to start investing today, not tomorrow or the next day. Invest today in cash flowing investments. You're doing great in your career already. You're highly paid. You're doing fine. But instead of buying that new Land Rover, maybe invest that active income that you've earned into a real estate syndication or a business. Do that first, then maybe buy the Land Rover. But start investing today. That should come first. Start building up your passive income streams a little bit at a time, or maybe a lot of it at a time if you have a large chunk of capital saved, until what I consider stage one, where you're able to cover all your basic expenses. I'm not talking about your expensive, lavish vacations or $400 dinners, but I'm talking about your rent or your mortgage, your groceries, utilities, and other recurring expenses. For instance, me and my wife, that's a modest $80,000 a year that we need to cover our basic expenses. Then stage two is different for everyone. You can call your own stage two when you've achieved passive income streams equaling your active income stream, which can admittedly be difficult for high income earners like yourself. Or what I like to do is consider it a number in which you can live comfortably, doing a lot of the things that you like to do. Those occasional $400 dinners, some big vacations here and there, and the hobbies that you enjoy doing. There's also stages 3 and 4, but we'll get into those later. Let's really focus on achieving stages 1 and 2. And if you're already there at stage 1, you're financially free, meaning if you walked away from your income, your active income job today, you would be fine. Your expenses are already paid by your investments. If you're at stage 2, you're even further into financial freedom, where you can live comfortably. You can live a joyful, happy, healthy, fun life just based on your investments and without your active income. Now, today's guest of honor, Michael Gilman, is a Brooklyn Law School grad and former Wall Street securities attorney. He's achieved financial freedom by replacing his active income with his income generated from his real estate investing. He's the founder of Cross Mountain Capital and has acquired over 500 units as the lead sponsor. All right, let's jump in.
This is the Passive Income Attorney Podcast, where you'll discover the secrets and strategies of the ultra wealthy on how they build streams of passive income to give them the freedom we all want. Attorney Seth Bradley will help you end the cycle of trading your time for money so you can make money while you sleep. Start living the good life on your own terms. Now, here's your host, Seth Bradley.
Michael, what's going on, brother? Welcome to the show.
Hey, Seth. Thanks for having me on.
Absolutely, man. Excited to have you on. I know you've got a legal background just like myself and a lot of listeners. So let's dive into that. It's always an interesting topic. So what's your story? Feel free to take it back as far as you'd like.
Yeah, sure. So kind of take it back to college, went to a liberal arts school, graduated with a liberal arts degree, didn't really know what to do, went to law school. Quickly discovered I didn't like it, but stuck it out anyway. I went there on a full scholarship over better schools or high ranked schools. The school I went to, and so that was kind of a strong impetus. But yeah, I remember my first day. I walked into the lecture hall, like 200 people. Everyone had their notebooks, laptops out, diligently taking notes. And I knew right away things were going to be a little different. I was never a big note taker, but anyway, stuck it out and was always business minded. Did a bunch of day trading back in my college days, and throughout law school, always business minded. And so one of the things I tried to do was steer myself to go in-house. I knew I wanted to be more like in a direct business environment. So so I was in New York City at the time, so I had some opportunities to intern on Wall Street. I started my career at Bank of America right after they had ingested Merrill Lynch. So I started in-house, just supporting lines of business, trading businesses, and from a regulatory as well as a business line perspective. And was at a few places, done kind of covered various pretty much all your typical Wall Street business lines at some point. But early on, I knew, right, you would say with two years out of law school, I knew that the way forward wasn't the legal practice, or even even working at a company, because ultimately you're trading time for your hours for money. And so being on Wall Street, I had a unique opportunity to kind of cycle through trading desks and through the business lines and see who's making money, how are they making money, like how volatile is it stable. And so I kind of looked around, looked at asset classes, and really came to the realization that real estate seemed to be one of the best ways to build wealth over the long term. And so I started, say early on, 2-3 years after law school, I started investing here in regional markets in New England, some high cash flow, non-competitive markets, and with the goal of eventually building up a cash flow portfolio to replace my W-2 income, because I knew I didn't want to do law for forever. And so my first thought was just safe cash flowing investments. So my strategy at the time was just tertiary markets, high cash flow markets that don't fluctuate too much in value, but have high cap rates. It was kind of buy and hold, stable, just because I didn't have the time to really focus on repositions or pretty involved strategies. And so that's how I started. Ultimately started transitioning my career more towards real estate. I had the opportunity to leave Wall Street to go to a real estate startup that was venture backed by some pretty big funds, and I had the opportunity there to branch out outside of legal. I was the head of legal, but I also managed the company's real estate portfolio due to my experience with my own portfolio. By this time, I had amassed about 50 units for myself. Again, not through a partnership or anything, just kind of my own capital. Again, with the sole aim of just replacing my salary one day. But being in the venture cap space, that's when it really started to dawn on me about why not pool capital, raise capital. I saw how easy it was in this space. People were just throwing money at companies that didn't make money and had such a high degree of risk that I'm sitting here, I'm looking at my real estate returns over time, where I basically did nothing, just buy and hold cash flow. And so this is a no-brainer. It's so much less risk, so much more money. And so ultimately, I left to do larger transactions, start my own firm, Cross Mountain Capital, pool capital, and do larger deals and expand our strategies. We focus a lot now on various strategies we could get into, but definitely expanded outside of that core kind of cash flow component.
Yeah, man, there's a lot to unfold there, man. I mean, the first thing that's
Sorry, I just kept going.
Yeah, you might as well, man. I'll have to rewind it back a little bit, but the first thing that stuck out to me was, you said you didn't know what to do, so you went to law school. I think a lot of folks can relate with that. I know I personally can. I went to med school first and hated that. I dropped out, and then I got my MBA because I didn't know what else to do. I thought it might be a good idea, and then I was like still kind of stuck in that trading time for money, get the best job mindset. That's why I decided, well, I guess the next best job I can get if I'm not going to be a doctor is to be a lawyer. So that's kind of the route that I did. I was like, I guess I'll just go to law school. And then you kind of get stuck there and you're like, okay, now what? But that's awesome that you did well there. You went to a great school, you got a good job, and you're able to, at least use that. I'm assuming you use a lot of that active income that you're producing from your legal profession and put that into cash flowing real estate that you had mentioned.
Absolutely. That was crucial. That's what allowed me to do it myself and not have to partner right off the start, which I actually think partnering is very important. And I'd say if I would rewind it, I would have partnered earlier because I would have gotten to where I need to be faster. But yeah, I did plow it in kind of brute force method
Yeah.
savings.
Yeah. And there's a couple of different ways to do it, right? You can do it like you did it and start investing actively, buying assets yourself, or partnering with other people to buy assets yourself, or, now you're raising capital from other folks. So, those folks are investing passively with you. It's kind of a give take on your time and effort and your passion, how much you actually want to put into it. A lot of people, they understand that real estate is a great investment, but maybe they're not, they don't love it like we love it, right? Like we dig in, we enjoy it. Some people might not be that way, but they do want exposure to it, and they understand that that's a great path to financial freedom and to start billing less hours. And you've been able to do it from the active side pretty quickly. It sounded like you were able to stockpile some assets yourself, within 50 units within a few years, which is incredible, man.
Yeah, ultimately it was I was I'd say on my W-2 for about eight years,
Mm-hmm.
So and I did investing, I'd say out of 5 of those. So again, it was a slow build just because I went at it alone. Again, if I what's funny is I discovered kind of the podcasts and Bigger Pockets later on, and I feel like I've learned more from those sources than I ever learned law school or business environment. It's really kind of fantastic stuff out there. So I probably, again, would have done that faster to accelerate my my unit count.
Yeah. What advice would you have for attorneys that have a high paying corporate job, maybe in Bank of America or some corporate setting like that, or at a big law firm? Should they go about it the active way or the passive way, or maybe both?
I think it depends what your passion is. If you're passionate about business and you want to get into the business, then absolutely go after it the active way. It becomes much more like a business, especially when you scale and have to build out processes, and especially if you get into the management aspect, which we have. So I would say start with that. What's your passion? If it's just like a pure investment, then certainly more on the passive side makes sense. Otherwise, actively jumping in makes sense. And I think to start out, it always makes sense just to do your own little deal, to start somewhere. Being especially in big law, we are working 80 to 100 hours a week or whatever. It's hard, right? That's the excuse. Well, I don't have time for that. How am I going to do that? But you can always make time. It's always possible. So where there's a will, there's always a way, and it's just important to get started. I think part of the thing is, right, attorneys are traditionally risk averse, so it's kind of thinking with a different side of your brain. Yeah, obviously analyze the deal, but at some point you have to trust your intuition and kind of your passion and what you think is the path forward. And it's not going to be sitting there, and wishing you're going to do something.
Yeah. Yeah. You mentioned some really important things there. I mean, if you talk to any real estate investor, our age or, in this similar age range, they'll tell you they started listening to Bigger Pockets podcast, right? You start listening to Bigger Pockets and that kind of gets you excited about investing in, smaller stuff like single families. And then you kind of work your way up and go from there. So it's pretty interesting to hear, to continue hearing people talk about, that as kind of their self-education journey. And that's part of it is the self-education. You're not going to learn this stuff in law school. You don't learn it in undergrad. You don't learn it, with your formal, normal education. You have to go out and you have to get this information from podcasts, from books, from YouTube, to learn this specialized knowledge. And it usually gets you excited and gets you moving in the right direction.
Yeah, absolutely.
Yeah. And then, you'd mentioned about attorneys being risk averse. We're kind of taught to be that way, right? I mean, we're taught to think about risk, think about liabilities, and that kind of puts us in a situation where, maybe we apply that to our own lives, unfortunately, with investing. And we think of, a lot of times you think of real estate investing as risky, which is weird, right? Because it's not when you compare it to, look at the volatility in the stock market today. That's risky to me. Having one active income stream without any other income streams, that's risky to me. Investing in real estate, which is stable and consistent, is not risky in my book, at least on a comparative basis.
Yeah, the cash flow, and that's how I started investing for cash flow. I think in terms of risk, that's the safest way to invest in real estate. And kind of there's different parameters, you start entering more speculative markets with lower cap rates. But each strategy has its own advantages and disadvantages.
Yep. Yeah. But then one more thing that you mentioned about, people say they don't have enough time, right? They don't have enough time to invest, or they don't have enough time to learn something new, how to invest in real estate. Well, you can make time. I mean, you have the time. You just need to figure out where you can carve that out. And then, the other side of that is I don't have enough money. Well, you make $500,000 a year. How do you not have enough money? It's because you spend it all on stuff that you don't need. You need to be putting that into assets that are cash flowing and give you returns back, and then maybe spend those returns on some of those things that you want. But you've kind of got to get your house, your financial house in order to be able to succeed in the long run.
Yeah, 100%. On that point, right? I never bought a fancy car, still don't have one. Drive a old Subaru. Always a kind of plowing into things that appreciate and not things that are transitory or depreciate.
Yeah. So tell me about your transition out of your legal practice. Now that you're officially all the way out, what did that look like? Was it all at once? Was it kind of gradual, or how did you kind of make that transition out?
Yeah. So, I'd start by saying I'm not completely out. I hung a shingle at a friend's law firm just to, sometimes I'll get involved in some friends' deals or other things. But just, I don't know, it always felt like I put so much time and energy into it. It would be a shame to leave it. But
right.
I'm still, I'd say probably spend maybe 2 to 3% of my time on legal. But it was in stages. It was first investing, then focusing on investing, building that stream, and being able to put myself in a position that there's something that could replace, right, that W-2, and then at the same time actively trying to shift my career more to real estate in ways that I could through my legal practice, and ultimately. Because of the experience I developed as an investor with my own assets, I was able to actually parlay that into a hybrid legal business job. And ultimately, again, when COVID hit, which I feel like was a big transition point for a lot of people, and just again being in this environment where seeing how easy it was to raise capital, that was finally like the moment it really dawned on me that it was time to really take action. I was always waiting for my personal portfolio to get a little bigger, get a little more cash flow, and there's never going to be a time where you feel like it's enough. It's always scary to just jump, it felt like a big leap, like kind of jumping off into the unknown.
Yeah, definitely. Do you think that your legal background helped you succeed in this current business? It sounds like it did. I mean, it gave you some opportunities with, seeing Wall Street, and then with a private equity firm, and then kind of, using the skills that you learned in some of those positions to what you're doing now today.
Yeah, absolutely. From a knowledge perspective, understanding how the capital markets work, funding, lending, real estate closings, all the structures behind that, is definitely helpful. Certainly the network you build, especially on Wall Street, and for terms of future investors, it was definitely helpful. But ultimately, the most helpful thing of all was doing it. Just doing it and making the leap.
Yeah, definitely. Let's talk more about kind of what you guys are looking at now. What kind of investments are Cross Mountain looking at? And what's your investing strategy? What types of properties, geographies?
Yeah, so we're in 2 kind of regional markets. One is the Mountain West, primarily in Colorado, all across the Front Range. So that's a lower cap rate market, and what we try to do there is first and foremost, we do a lot of off-market acquisitions. We have dedicated off-market search team. We work with a company called Offered, OFFERD.com. They've been great in terms of mining off-market assets. They go out and contact these people directly. And so we've done a few deals that way. And we try to do repositions, like your classic neglected asset or mismanaged, and with heavy value add, really capitalize on that low cap rate environment, getting a lot of bang for your buck out of your every dollar you spend. and we're active in New England, in New Hampshire and Vermont. Vermont's where I started investing. What's funny is I started investing there from just because I like going up there for skiing and outdoor activities, and I said, hey, I felt like I needed to be able to visit my properties. So that was one of the things that drove me there. But yeah, so up there that's more of a higher cash flow market, but plenty of value add. But we look to do longer holds there because the assets cash flow so well. Then we get into other stuff. We have some self-storage. We do some light development, which I would do more of if it was easier. What we've gone into is these prefab cabins, super cheap to put up, about $60,000 just for the cabin. The site work, you could probably get it all in. We get them all in for like $75K a pop next to these mountain towns, mountain resorts, and they just Airbnb so well. That's a great return on investment. Just really hard to build them at scale because of permitting and development issues. We're doing we have a commercial deal we're doing, which is a triple net lease supermarket that we closing on shortly. It's part of a portfolio. So actually, and because the assets out there in New England are smaller in these rural markets in New Hampshire and Vermont, we try to aggregate portfolios to get bigger deals, and that's a different type of strategy also, because you have a lot of flexibility there and how you dispose of assets.
Yeah, and I think I saw somewhere you guys are vertically integrated, meaning that you have in-house construction and property management. Is that right?
Yeah, and so this is originated. So my affiliated entity, MSA Properties, it manages all our portfolio throughout Vermont, which is north of about 300 units and closing on about 50 more soon. And that really grew out of necessity. It's honestly not a business I really wanted to be in. It's my least favorite part of the business, but it's in a market like that, it's a rural market, tertiary, almost a frontier market. There's no good operators from management perspective. It's everything. So we kind of had to build everything from the ground up in order to be able to manage these portfolios and these properties and optimize them. And so we only manage our own stuff, and it's really, to me, a ancillary to making sure that portfolio is performing, just because there's no one you could really hire out there.
Yeah. Do you guys think you have some advantages? I know that's not necessarily a business you wanted to be in, but now that you are, do you think that gives you some advantages?
Yeah, especially in a market like that where there's not many sophisticated operators, not anyone doing anything of scale. It gives us a lot of advantage for sure. It's kind of like being a bigger fish in a small pond.
Yeah.
Out west in Colorado, we've been fortunate to find a great GC property management company that we've developed strategic joint venture relationship with. They invest alongside with us on deals, and so we're tightly integrated there. We use the same property management system front ends. So it's not your typical kind of third party property manager. It's more of a strategic integration, because it was just too formidable and wouldn't have been effective to try to build it out in a different market that I'm not even close to.
Yeah. Have you always been attracted to these different types of assets? I know you mentioned, a few different types of things that you guys are getting into, or has it been a necessity of kind of the competitive market in the multifamily space?
Yeah, so I'd say it's been out of the competitive multifamily market. When I looked around, felt like Class C multifamily just seemed a little safer with a cash flow cushion and higher cap rates. And then always the kind of, it's really simple strategy, but just that 1960s, 70s vintage or anything older, just renovating it is really was kind of always, you can make the numbers work on a deal if you have that kind of asset. And so you could always buy it comfortably. I mean, assuming it's priced, properly. But it always seemed to me like that was a safer way. Forced appreciation was the safest kind of way to invest.
Yeah. And you had mentioned some heavy value add plays. Like, What kind of money are you putting in on a per unit basis? I'm just curious for myself.
Yeah, so we average about, if we're doing a gut renovation, new, flooring, kitchens, cabinets, not talking about any electrical or demolition or anything like that. We say on a 1 bedroom, normal size, probably around 8,000 to around, we try to stick to that 8,000 spot.
Gotcha. Cool.
And pushes up, obviously, if you get larger, and 2 bedrooms starts to get into the 10,000 plus range.
Yeah. Cool. Let's switch gears a little bit and talk a little bit about mindset. I know we kind of touched on, your transition out of the law and into real estate investing full time. And a lot of our listeners out there are interested in, real estate, and maybe they don't want to transition all the way out, but they're interested in billing less hours and working less and things like that. But what do you think kind of separates successful people like yourself who've taken action and control their lives, and compare that to folks who just kind of complain about it and never get out? What do you think separates that?
Yeah, so I think it's that taking action part, right? So, in this position, right, you're especially attorneys, you're a high performing individual. And you tend to excel, a lot of these types tend to excel where there's a goal in front of you, like the LSAT or a grade or passing class, and you can blow it out of the water. But if you have to set that kind of goal or parameter yourself, that I think that's where it might start to break down, where there's no kind of external force pushing you, where it has to come from within. I think that's where it really, the rubber meets the road. So it's about setting that goal and actioning it and taking that risk, and not being afraid to fail.
Yeah. And I think that it helps kind of putting yourself, and I'll call this networking. It's kind of networking where you put yourself around other people that are doing that. They're taking action. They're investing in real estate. They're buying businesses. They're doing things like that. They have kind of that entrepreneurial spirit, and kind of taking yourself away from just the, being around the same type of people all the time. And it expands your mind and gets you thinking, and that kind of propels you and pulls you in that direction so that you can get enough impetus to take action and to do something for yourself. But if we always surround ourselves with the same people that we always have, and it's kind of this homogenous group of people, it's hard to take action without something happening, unfortunately. And a lot of times that's kind of what you hear is, maybe you got fired, or something, a health scare or death or something like that happens, and that kind of flips the light switch for people. So to be able to skip that step, it's great to network and put yourself around entrepreneurial folks.
Yeah, 100%. I think that's huge. And especially in this day and age where it's so easy to do that, you don't even have to leave your room, which actually for someone like me is awesome. I don't particularly like going to events, but it makes it so easy that it's kind of hard to do an excuse. Like, even, I'm kind of an introverted person, but look, here I am doing this podcast. It was just the click of a button.
Yeah.
So I think that's paramount, and to not take advantage of it now in today's age where it's so accessible, you're doing yourself a disservice.
Yeah. And you nailed it. I mean, the pandemic really accelerated that. I mean, if you can think back to before the pandemic, jumping on a Zoom call with someone like this, I mean, it was an odd thing to do. It wasn't like accepted like it is now. It was kind of it was a little bit weird. Now it's just normal. Like, everybody's like, hey, let's do a Zoom call. Let's have a meeting over Zoom. Like, let's have a cup of coffee over Zoom. Like, it's just like a normal thing to do. But before the pandemic, it wasn't that way for the masses.
Yeah.
All right, brother. Before we jump into the Freedom 4, do you have one last golden nugget for our listeners?
I'd say don't be network, find a group you like and learn, and B, don't take action. And the sooner you do those things, the faster you'll get to where you want to be.
Absolutely, man. All right, let's jump into the Freedom 4.
It's time for the Freedom 4.
What's the best thing you do to keep your mind and body healthy?
Exercise, and specifically, I'm big, love the outdoors, exercising outdoors. So winter sports in the winter, and trail running, and the other off seasons. So trail running is a big way I found I've kind of sort through problems and meditate. You kind of get in this rhythm where you're not going too fast and a comfortable heart rate, and you could just really solve some problems I found, as well as restore yourself, rejuvenate yourself. So exercising in nature I found is very restorative. I try to do that. Of course, hitting the gym a few days a week, I'd say are the big two. Try to do some light meditation. Always I find to be one of the most difficult things to quiet the mind. But
Yeah.
very restorative.
Yeah. Is that a reflection of the name of your company?
Yeah, absolutely. So, where I started, we started investing in Vermont, which is a rural, mountainous, kind of state. And we found the kind of quality of the tenant, the types of tenants, the types of people that states like that draw, made it very compelling for us. And I felt like I really liked visiting the properties. In the beginning, that was important to me. So I really wanted to invest somewhere where I was spending a lot of time. As you scale, that becomes a little less important. But certainly we try to focus on markets that promote the outdoors and kind of the life, are health and lifestyle oriented, which is also coinciding with this big, I think, generational shift in migration, right? You see people pouring out of these big cities, and because they're free, they can now live in these destination towns that were previously only for visiting. And I think that's one of the biggest shifts that we see today, and that coincides with our investment model.
Yeah. Yeah. I think that's a really smart way to think about things. With all your success, what is one limiting belief that you've crushed along the way, and how did you get past it?
Just feeling that I had to get to a place where I was very safe before I could really pursue, real estate and doing what I want to do full time. Just feeling that I was kind of always one step away, or needed some more buildings, or things weren't set, and that the moment wasn't ready. So that just the sooner people, no one really realizes what they're capable of until they set out to do it. And the bigger the challenge you could set for yourself, I think the better right off the start. So kind of not scaling fast enough, is probably one of my big regrets.
Gotcha. Yeah. You've got to get comfortable with being uncomfortable. If you're not uncomfortable, then you need to push yourself just a little bit further. What's one actionable step our listeners can do right now to start creating more freedom?
I'd say pick a market you want to invest in, and start following the real estate in that market, seeing the deals, underwriting them back a napkin. I mean, you could underwrite something in really 3 minutes. You just need the NOI, you need the cap rate, the NOI. You don't even have to put a model in. You could in the beginning it takes longer, but you quickly get to a point where you can look at these deals and tell if it might make sense. So first is just exposing yourself to what's on the market, what's the pricing, what are things going for, what kind of strategy can you deploy. I think that's the best way to get started. I remember getting started, I just had a bunch of filters up in the markets I was looking at, and every day I'd get listings, I'd look at them, do like a back a napkin analysis, and then one day I saw this building and it just made sense, and I was like, wow, these numbers are great. And that was my first deal, and it came off the internet.
That's awesome. Last but not least, how's passive income made your life better?
Control your time, how you want to do something, when you want to do it. Just freedom over everything, and being able to spend time with family. I have a 4-year-old and a 2-year-old, so just being able to be there as they're growing up has been huge.
Absolutely, man. Mike, this has been great. Where can our listeners find out more about you?
Sure. You could check out our website, crossmountaincapital.com, and we have an ebook there which talks about why real estate we think has the best risk-adjusted returns compared to other asset classes. So you could definitely check that out. And otherwise, our strategies and our properties are all up there.
Awesome, man. We'll drop all that in the show notes. All right, man. Again, it's been awesome having you on. Talk soon.
Likewise. Thank you. Thanks for having me.
Thank you.
Bye.
Love that conversation with Mike. His story should be a great inspiration on how you too can get out of the rat race with just a little bit of sacrifice and some intelligent investing strategies. Major key from this episode: buy back your time piece by piece. You hear me say it all the time, but when I say it, I mean it. Invest in one deal. Get started. Get it into one deal that produces cash flow. Invest in another and another and another. They're going to snowball. And soon your passive income will cover your basic expenses. And eventually it'll cover your active income, or at least your expenses, so that you can live happily and comfortably. But first, you've got to start. So if you're ready for a change and ready to take action, partner with us on one of our next passive real estate deals. Go to passiveincomeattorney.com and join our Esquire Passive Investor Club. All right, kiddos, as always, enjoy the journey.
Thank you for listening to the Passive Income Attorney Podcast with Seth Bradley. Do you want more ideas on how to generate multiple streams of passive income? Then jump over to passiveincomeattorney.com for show notes and resources. Then apply for the private Facebook community by searching for the Passive Income Attorney on Facebook. And we'll see you on the next episode.